Hello, everyone, and welcome to the webinar today. My name is Leah Wietholter. I'm the founder and CEO of Workman Forensics, and we're located in Tulsa, Oklahoma. Today, I'm excited to share with you finding fraud in payroll. Before we get started, I do just want to mention that you may have seen, good morning, Kelly. You may have seen on our website or any of our other training materials that we're a NASPA sponsor, but I just want to make sure that I let everybody know that this one is not on our sponsorship list. This is really, we're wanting to help small business owners and fraud examiners just connect what they know from maybe theory or what they've heard somewhere and connect that to real world. And since payroll is on everyone's mind right now, either how are they going to make payroll or maybe looking at payroll reports to apply for the PPP loan. Whatever the case might be, I just thought this would be a great topic to discuss today. And so just a couple of things. You probably can see that Kelly and Richard, good morning, Richard, have said hello to us in the chat feature of this webinar. Feel free. It says say something nice. Yeah, just keep it nice right there. If you have a question that you'd like for me to address during the session, at the bottom of your screen, you'll see an ask a question link. You can just click on that and then I'll make sure to answer questions at the end. If at the end there are no questions there, I will just, if you have questions, you can put it in the chat. But if you think of it during the presentation, put it there and then I'll address them at the very end instead of stopping and starting again. All right, so let's get started. First of all, in this presentation today, this is part of what we're calling our Data Sleuth. This is part of our Data Sleuth series. And we actually do provide an 8-hour course that we call Be a Data Sleuth. And you can find out more information about these trainings at beadatasleuth.com. And it's an 8-hour training where we do hands-on applications of data sleuthing. And we're going to kind of talk about that today as it relates to payroll. And then also part of that training is our investigation game. It's a lot of fun. It's a NASBA approved seminar, but we don't have any openings right now just because we don't have a whole lot of time. So we're going to open those back up hopefully in May, June at the latest. So just kind of keep looking for those if you enjoy this. Also, for the next 2 Fridays, we're going to do two more of these 30-minute data sleuthing, finding fraud using data, little 30-minute webinars over the next 2 Fridays. So next week is finding fraud in revenue. The next week after that is finding fraud in expenses. And this isn't financial statement fraud. This is really practical, just straight up embezzlement. This is how you find it using data. These are the different schemes, and this is how we use data to investigate the losses of those schemes. So today we're going to talk about what is data sleuthing. We're going to cover that just for a second. And then we're going to talk about how do we data sleuth payroll reports to find ghost employees or duplicate payroll, off-cycle payroll, and false reimbursements. We're not going to get into time and expense fraud today because we don't have enough time, but we're going to cover, but the ones that we're going to cover are the most common embezzlements that we work related to payroll. And then we're also going to show you just a cool graphing tool that we have available on our website if you're interested in doing this on an ongoing basis. And anyway, so let's just get started. First of all, data sleuthing. So full disclosure, data sleuthing is a term and a phrase that Workman Forensics has actually trademarked. And I created this because we do forensic accounting and fraud investigation, but we do it a little differently because we connect it with data analysis. And so when you put those two things together, we essentially have data sleuthing. So you're probably familiar with data analysis, or at least the term data analytics. That's really popular, or even data mining. Goodness, every time that I watch like a White House briefing, or even like things that our governor's holding right now, they're talking about the data and the models. And so we're familiar with those phrases, but if we can take the power of data, so, you know, the fact that they can predict or estimate what could happen based on data and trends, that's a very powerful tool. And so we're going to take data And then we're going to take our skills as investigators, forensic accountants, what we know about accounting, what we know about investigations. And we're going to merge the two things together, because in doing this, we can see more than we could if we were just flipping through a bunch of bank statements, flipping through a bunch of payroll reports. So we're going to talk about how to do that today as it relates to payroll. So first of all, if you have looked at payroll reports, you've probably seen a PDF version that looks something like this example. And if you have several hundred employees, or man, I mean, I have less than 10 employees. If I'm looking through every month, or I suspect something, looking through a bunch of PDF pages is not going to tell me much, right? You might be able to see a couple things that are weird, but you're not going to be able to take that weird thing on the PDF and then extrapolate it in a quick way, an efficient way. You would somehow have to create a list. You'd have to create an Excel spreadsheet to kind of start tracking these weird things. So the most common way that clients provide us with payroll reports is in a PDF format. Now, we use IDEA to help us import payroll reports, but it's really, sorry, IDEA, I love you, but it's really not that easy with every payroll report, especially when this is just a little like data analyst thing coming out in me. But when the payroll report has an employee record that extends to the next page, like that is so frustrating, and it's very difficult using something like IDEA to import that PDF. And actually, I'm going to make this bigger for you and make myself smaller. All right, there we go. So what we want is to work with the client, or if we're doing this for ourselves, we want to be able to log in and export a CSV or an Excel file. This puts this in a table format so that we can have our headers at the top, our names, the gross pay, the taxes withheld, the hours worked, the rate of pay, all of that is a header up at the top, and then all of the information can go below this. And then this way you can have lots of different pay periods within the same spreadsheet. And then what we're about to look at is much simpler. So we're going to assume for the rest of our examples that we got some awesome CSV and Excel files to help us do this. If you receive a PDF report, you're going to have to somehow convert it into a table format to be able to do what we're going to talk about today. So first of all, let's talk about ghost employees. There are several different issues that we like to look for to identify ghost employees. And before we look at this example, I just want to point out that the things we're going to look at today, these are indicators that we might have a problem. It could just be an indicator that we have some sloppy record keeping. Just because we find some of these things we're going to talk about, it doesn't mean that automatically we have fraud. These using data and these different tests or things to look for, this is going to identify for us just where we start. Where are we going to start our investigation? And what do we need to ask the client about? What do we maybe need to ask HR about or some manager about? And so it gives us a starting point. It doesn't necessarily mean instantly we have fraud. Okay, so just disclaimer up front about that too. So some of the things we're going to be looking for are duplicate social security numbers, duplicate addresses. We're going to look for employee records that have no addresses. And then also we need to just look at the number of employees. So let's look at a video here. So that I didn't have to do this webinar and also work Excel, I've pre-recorded some videos to talk about just to be able to show you how this works in Excel and using Excel. So this is for our, let me make sure you can see this. Okay, great. So this is our example of ghost employees. And so what I'm looking at here is this is just it is a real data set, but we've edited out information, of course. And I've also added just an employee number so that we can make sure to talk about that. But this contains the last four of socials, their addresses, cities, states, zip codes. And this would just be considered an employee kind of like you have a vendor file. These are just all of your employees' information. All right. So the first thing we're going to look for are duplicate Social Security numbers, and we're going to do that through conditional formatting. Conditional formatting allows you to choose duplicate values, and then it will highlight them for you. Then we're going to filter. We're going to filter by color, and then as you can see, these are all of the socials that are duplicated. And that doesn't mean that we automatically have fraud, like I mentioned. It just means that we might want to look into these. Now, the next thing we're going to do is we're going to do conditional formatting again, and we're going to highlight duplicate values for the address column. Once again, we're going to filter by color, and we're going to look to see which addresses match. And this is only going to pull addresses that match exactly. Of course, if 1005 West 19th had a period in it, or maybe they spelled out 19th, it's not going to pull that information. So then what we're going to do is we're going to look for the entries that don't have an address at all. And let's talk about why we would look for that just for a second. So we're going to want to look for employee records that don't have an address, because if it's a duplicate entry, they may want the check just to be, let's say that they set this up to not be direct deposit, or maybe they do, but they don't, like maybe they know that you checked for this, so they don't want to put an address where you have two addresses. Maybe they know that if you print out checks, then you're going to see that there's two checks to the same person. So this is just something to check for, to check the address. The reason I didn't include the names and why I don't want to search on the names is that for a ghost employee, they could leave let's say, so it's one of the common ways that we have a ghost employee is if an employee leaves the business, they're let go, laid off, whatever, quit, and then whoever is in charge of payroll doesn't remove their employee record, still leaves them on payroll, but maybe they just changed their Social Security number. And then let's say they want to remove the address so that that check doesn't get mailed to that employee because they're wanting to take that money. Also, you mail a check to an employee who's left, they could be honest and say, hey, I got this extra payment. So that's another reason why you want to look for that address if the address is blank. All right. So the other thing we're going to do, the next step that we're going to take, and if you'd like this formula that I'm using in the video, you'll be able to watch the video after this webinar and you can use it. But as I mentioned before, if an address isn't exactly the same, the conditional formatting using duplicates won't pick it up. And so what we're doing here is we want to extract the number portion of the address. So as you can see from that first address, we have 716 West something. I didn't use the whole name. So it pulls out the 716. Now, the next step is we're going to do concatenate. It's a function in Excel, and you're going to want to essentially join the address number and the zip or postal code. So as you can see, 716 came from the address column, and then the zip or postal code is connected. So that's how we're going to do that. This allows us to then do what we've been doing. We're going to conditionally format to look for duplicate values. And then again, we can filter and filter by color to see how those are connected or to see what's duplicate. So what I'm looking for here, so just as an example, this 200 West van something, we have 200 W period van, and then we have 200 West, and then more than likely van. And so if we were looking at this whole address, more than likely, these are different Social Security numbers at the same address. And this isn't uncommon, especially like in manufacturing in a smaller town. You're going to have family members who work in different parts. But then also, this is a really great test if you're working with a client and they have, maybe they have a policy where certain family members can't work for each other. And so this is a good way to see, okay, how many family members do we have working in this organization? And then we can go look at the org chart or go look to see where they're assigned and see if there's, any policy or violations in that way. So we're going to definitely want to look at those. Then also this 721 West RAMI, or like the one I just highlighted, it didn't have the West in there. Now, once again, these could just be that whoever was entering the information didn't know the employee record already existed and they left out the West. This happens a lot in vendors. This happens a lot in vendor files. So it could also happen here, although we've got different social security numbers. So that might not be as high risk, but we still just want to go look at these. All right. So then we're going to take a look at all of those. And the ones that I would be most, the ones that would kind of rank as higher risk for me are going to be the ones that have duplicate socials, duplicate addresses, or our address number plus the zip code. And like the more of those data points, those would probably rank higher. But this was a decent, this company had about 300 employees, I think. So for this many to stand out, that's not that many to kind of run down and check. It never hurts just to check. All right. And then just as a last little thing on ghost employees is that you do want to make sure that you know the number of employees. So how many employees actually work? So maybe even ask all of management or supervisors, how many people are actually working for you right now? And then just compare that to the number of people on payroll, which that leads me to one last thing. Just because there are duplicates or no addresses, or maybe the number of employees in your employee records is greater than what you expected, you don't have a loss at this point. You have a loss when you go look to see, okay, let's track down all these duplicates. Should all of these people have been paid? If you identify, which has happened to us last year in a case, if you identify that there are people that are on payroll and they shouldn't have been paid, they were let go a long time ago, but they haven't been taken out of the active system, you need to then, don't get all excited then. Go look at payroll and make sure they've been paid. If no money has been paid, then you don't have a loss, right? So just a little, I used to get, in my early days of doing this, I used to get real excited when I would find some of these anomalies and then they weren't paid. It was just an error, which I would say a lot of them that we've run into, they are errors instead of actual ghost employees. Okay, duplicate payroll. This one's kind of fun. So this one, I have a story on this one because this case was about this was a lady who, I'm so sorry, I'm trying to do this. So this lady was a bookkeeper for a small consulting business. And originally they had just paid everyone on the 15th and the last day of the month by check. Well, and most of them were local. Then one of their employees lived in another state. And he said, is there any way you can do a direct deposit so that I can get paid when everyone else gets paid? The owner thought this was reasonable. So he told our subject, the bookkeeper, he told her, go ahead and set up payroll so that we can do direct deposit. Well, she was doing payroll out of QuickBooks and using their service. And so she set up his direct deposit. But while she was setting up his direct deposit, she just went ahead and set up her own direct deposit. So, but he didn't notice this because she was still getting paid by check. So let's look at this duplicate payroll. So this is the actual data set from this case. And the way that we knew about all of the check payments was from bank statements, because we could actually see what had been paid to her through a check. We also had the payroll reports, but we made sure that the checks that were on the payroll reports actually went to her. Then we knew about the direct deposits because of payroll reports, and we could connect that to the bank statement by looking at the ACHs for payroll. So we could confirm all of that actually happened. Then, so I just wanted to point that out. Then one of the things we wanted to look at was, since we knew she was getting checks and then she was also getting direct deposits, we wanted to see, like, was she paying herself half in check, half in direct deposit? Because that would have been okay. And so one of the things we did kind of at the beginning was just look at what day of the week was she being paid. And so because they were paid on the 15th and the last day of the month, then that's not always the same, right? Like, I mean, it's going to be a different day every month. But what did stand out to us are all of these checks that were paid on Sunday. And so obviously that's why we wanted to look at that. Also, I want to mention that we were looking at check dates, not the dates that the checks cleared, because we want to see when was she actually issuing all of these checks. Then the other thing we started looking at on this was, so we have our Sunday and then we've got all these other days. So what we're going to look for are all of the, we're going to look for all of the checks that are issued around the same date to see how many checks or direct deposits she's getting in a month. And so an example of this would be in April of 2008, like I'm showing, that we have a direct deposit and a check. And so we had that throughout. The other thing that I find helpful when you're looking for duplicate checks, direct deposits or checks, is to graph it. And in this case, we have, I'll point out a few of those. So we have the direct deposits are the red dots, and then the blue diamonds are the checks. And so you can kind of see where I pointed out she got 2 checks or direct deposits several times. The other fun thing about graphing this is that you can see how many more payments she was paying to herself every year. And this is pretty common if you've worked fraud cases at all, is that the losses start out small and then they just continue to grow over the life of the scheme. So one of the things we had to do on this one too is just, once again, you have to connect it to some sort of loss. So some sort of payment. So if she had been paying herself multiple checks or direct deposits, but it all totaled what she was supposed to be paid, then we don't have a loss. It's just a really strange way to be paid. But maybe she wanted the direct deposit to go to one account and the check to go to another account. Who knows? So we actually have to compare this odd behavior to what was she paid versus what should she have been paid. And in this particular case, with this scheme, she stole about $85,000. The next one, this lady was an administrator in a partnership. She was also one of the partner's wives, or I mean, the wife of one of the partners. I said that totally backwards. And so in this case, I want to just point out that the risk that that you have when you have multiple companies, and especially if you have multiple companies with payroll. And so this administrator was told that she would be paid $100,000 a year. And by looking at, once again, those Excel payroll records, we were able to see that she had overpaid herself, including a nice little bonus on April 15th of $10,000. And so for a little over a year, she kept switching payroll companies. So we had to do this for multiple different payroll companies. And she overpaid herself $94,000. Well, then we started looking at the next payroll company. And there, for the period we looked at, she should have been paid an additional $65,000 because of the prior year, it was a little different. So we did this on a number of pay periods basis. And so in 2017, she was overpaid by $65,000. Well, then At the same time, she's overpaying herself out of the main company. They had another company that kind of helped manage the building and so forth. And QuickBooks, you can easily set up payroll service out of QuickBooks. So she decided to also pay herself out of the building company and just set it up and just started paying herself an extra $10,000. And she was not supposed to be paid out of that. Her job involved managing all of the finances of these companies. And this was just, it really was minor. Kind of, whenever they set up the businesses that one business owns the building and then one runs the business and then they pay the building company rent. That's kind of what was going on. So she shouldn't have been paid that. This was part of a $1.5 million embezzlement. She stole lots of different ways, but through the payroll, she stole $170,000. All right, so this next one is our off-cycle payroll and reimbursements. And on this one, let's see. This is a case of theft through multiple different ways. But what I wanted to be able to show you today is, like we did before, looking at the day of the week. And so we're going to use this formula. Once again, if you want to know how to use this formula, you can come back to this video. We'll also post this video on our YouTube channel. But we're going to look for the day of the week by entering our formula. Then we're going to filter. And for this company, they paid payroll every Friday. That was their standard. So we have all kinds of other days that they were making payroll. The one that stood out to me were the Saturday payments at first. But once I started looking at these more carefully, these were a bunch of just small payments, and it turned out it was expense reimbursements. It still might be something that you want to go look at just to make sure that these expense reimbursements should have happened. But this ended up being okay. Then what we're going to do is we're going to look at all the other days. And I chose just Monday to look at next. So we're going to look at Monday, and immediately, if you notice on that top line, we have a $100,000 payment. We have a $60,000 payment. And so what I want to do, I can use the filters to then kind of drill down and see, okay, what types of payments end in even dollar amounts? And I start noticing that we have this Pierce Forsyth guy, and he seems to be getting a lot of these payments. But then I also noticed that we have a lot of $1,000 payments. So we asked the client, what are these $1,000 payments? And they said, oh, they were making company-wide bonuses. Okay, so we're probably fine on that. But what about this $100,000 or $60,000? Well, that definitely was not okay. So what I'm doing here is sorting by name, and then I want to go look at this Pierce Forsyth character and see what we have going on. And oh my goodness, check out just those first few rows. We have a lot of payments, and these are directly from the payroll provider. So we know that these were debited from the account. Something else interesting about these payments is that they paid payroll primarily through direct deposit. And a lot of these payments were paid by check. That's why there's a check number there. All right. So then we just continue to drill down and see that to get rid of the bonus payments, because we want to see who else, once we get rid of the bonus payments, what happens. And so in doing so, in removing the $1,000 payments, there we go. It worked that time. In removing the $1,000 payments, we could then see which other employees were receiving money. And it turns out that it was some of this guy's friends. He was also paying, they were employees, but he was also paying off his friends. But that's a way to use the days of the week and also our even dollar to filter for even dollar payments to identify some just kind of weird payroll payments. Also, what he was doing on this case, the really large payments, those were actually being coded as a reimbursement, and so it avoided payroll taxes. This next example, I actually use an idea, and on this case, the employees they did receive expense reimbursements, and they also received petty cash payments. And this should have only happened 3 times a month. So whenever I know this from a client, I like to then go look at the data and see what actually happened. So what should have happened, and we're going to compare that to what actually happened. And this is a screenshot from IDEA, but we just summarized by payee, and also by year. We create like a year-month column so that we can see how many payments, what were the number of records, so how many payments in a month were they receiving for either petty cash or expense reimbursements. Then we drill down, and this is pretty tedious, but we then drill down to see which items are supported, expense reimbursements or petty cash, what were the real ones, and then this will identify what were the fake ones. But that does require some manual work, and the owner and his wife actually did all of that research for us. We just kept identifying for them the people that needed to be researched. And then lastly, and I know we're over time, so if you need to get off, I completely understand. But I just want to show you our gross pay template example. And we're going to use the same data set as the Offcycle payroll. So you'll be familiar with this one with our Pierce Forsyth. And what I did was I just took information from the report and I just made a few more columns so that I could easily copy and paste this into our template. This is our template. And you can actually do this by payroll. I mean, we're looking at several years of data here, but you could just do this on a monthly, quarterly basis just to kind of keep looking at. This tool is really made to help you see the things that are going to just within payroll reports that will stand out as being odd or an extra payment or the off-cycle payroll. This tool is really helpful for that. So the first thing is that I copy and paste my data into the macro, and with the payday, the gross pay, I like to do it on gross pay amount and the employee name. And then the macro on this first page will summarize how much you paid to employees on each payday. So something that I noticed immediately in doing this is that our gross pay changed. And I don't know, let's go back just a little bit. Our gross pay, well, that may not work for me. But our gross pay kept fluctuating. So we might have 27,000 one week, but then the next week it was 9,000. And so that's just kind of odd, especially if the same people are working. Maybe we've got salaried people, maybe we've got hourly people, and then that would make sense. But those are just some things you can kind of notice from that first screen. Then the next tab is our gross pay scatter graph. And I really love this graph a lot because as you can see, all of the normal or expected payments are all grouped together at the bottom, and the things that are abnormal are sticking out. So this March 12th, 2015 payment of $200,000, we can go back to our original data set, go look for that date so that we can see who this $200,000 payment was made to. And as we already know, it was to the Pierce Forsyth character. And so then we can see, wow, that's really odd. But as you can see, it just sticks out very clearly. And so if you're doing this on a monthly or quarterly basis, you can identify these payments and go research it then, not when you're at in this case, a $3.5 million loss. And then this last graph shows our total gross pay by payday. So this is where I think you can see the off-cycle payroll that works really well. Even some of these smaller outliers, these are just when some of those other payments were made that weren't paid company-wide. I do have a question, so I will answer that. The question is, when you are first engaged on a project, how do you know which method of investigation to use first? For example, do you look for ghost employees first? So that is a great question. We actually start with something that we call our client concerns questionnaire. And so we ask the client where their concerns are, and then based on what they've told us, then we prepare a plan to investigate those things they've told us about. And so that helps us narrow it down, because these, our clients don't have unlimited budgets. And so if somebody comes to us and says, we suspect a ghost employee, then we're going to make sure that that's on our list. But at the same time, we're also going to go ahead and run everything that we talked about today, because if you run these tests on just one data set, it's so quick. And you can even create macros that will do this for you quickly. And so it really makes it worth, that's the beauty of data sleuthing, is that you can look at everything in a reasonable amount of time. And, but then if somebody comes to us and says, we suspect that they're just writing checks out of the bank account to themselves, we're not necessarily going to check for ghost employees. We're going to ask them, do you suspect that there's also issues with payroll? But, and that's just kind of part of that questionnaire that we have. We go through all the different ways. Most of the time, you're going to focus on, how does cash come into the business? Do you suspect you have a problem there? How does cash go out of the business? Do you suspect you have a problem there? And on cash leaving the business, that's where your payroll component comes into play. Are there any other questions? Oh. This is, yeah, so thanks, Dan. This says, I also look for employees paid that have zero benefits. Also, a great internal control for businesses is to look at to, from, or change report, which will show any changes since the last payroll run. And so you can look at if employees have been added and so forth. Yes, completely agree. Thank you. All right, so if there are no other questions, we'll go ahead and wrap up. I invite you to join us next week, same time, same place, for, well, you'll need a new link, but for the fraud in revenue, and I appreciate your time.